we go. And you're probably wondering, why am I not doing this before the song ends? Well, I'll tell you why. YouTube will probably not allow it because they'll think there's something wrong. You're playing the song. Oh, I'm sorry. We own the rights to the song. But anyway. All right. Looks like the live streaming is now up and running. We are
And you're
broadcasting
probably
live
wondering, why am
on
I not doing this
YouTube
before
as
the
well?
song ends? So,
Okay, there we go. One more thing we just have to do, and that's hit the record button. But first of all, just wanted to welcome you all. And while we're waiting for some more people to come on, there's a lot of people joining us right now. Just want to mention a couple of things, little housekeeping here. So, for those of you who've been here before, you obviously know how this works. But a lot of new people online here tonight, and want to welcome you all. And I tend to speak a little bit too fast at times. If you find that I'm speaking a little bit too fast, put it in the questions box there. That I'm speaking too fast, slow down, or if I'm talking about things that you don't quite understand, let me know that too, and then I'll rephrase it and put in different words so that might be able to understand it better. If we do get into any technical jargon you don't understand, don't worry about that. This is not going to make that much difference here tonight, whether you understand the technical aspects of what we talk about at all or not. So. Anyway, all right. Okay, I think I got it pretty well done. Oh, also, I want to apologize in advance. Okay. If any of this session here tonight sounds like we are going to be, bragging, that's not the intent. We're just going to be telling you things as a matter of fact. Okay? Just as a matter of fact. There's nothing bragging at all about what we're doing here. So. Okay. Did you share? I don't know if I can share my screen here. I thought I was sharing it. Maybe I'm not. Okay, let's share it. Here we go. Is it coming through as being shared? I think so. Looks like it. Yeah, we're all good. We're all good. All right, here we go. Okay, good evening, everybody. Welcome to DayTradeSPY.com's Week in Review, intro to trading, and it is Sunday night. Sunday night, my name is Hugh. It's Sunday, May the 18th, 2025. And along with me is my beautiful dog there, Lucy. I love her so much. Even though she's not with us anymore, but she's still in our hearts every day. Think about her. Please use the questions box. You'll find the link on your Zoom dashboard. Click on that. And I'm the only one that sees that, so go ahead and ask whatever you want. This is going to be an interactive session, so we'll certainly endeavor to take your questions here tonight. Going to be an exciting evening, folks, but meanwhile, before we get started, I'm going to give you a few seconds to read the disclaimer. Keeps the lawyers happy, if you know what I'm saying. All right, I think you understand all that. You alone are responsible for all your own trading, and past performance does not guarantee future results. Okay, yes, that keeps us out of the soup, if you know what I'm saying. Out of the big house. Hang on, let's go back. Let's go back. Just jumping the gun here. Wow. All right. One more slide. There we go. I've got a question for you, and I'm looking for some answers in the questions box here. Yeah, it's just I don't know what's going on there. Hit the button and keeps skipping a slide on me here. But anyway, folks, if you would be interested at all, I'm not really sure if you would, but would you be interested in a totally immersive, everything we do training course? In other words, we teach you everything, no stone left unturned. Please answer in the questions box if that would be of interest to you. Okay, all right, lots of yeses. That's what I like to see. Lots of yeses. Okay, all right. Okay, cool. All right. We just might do that. All right, folks. There I am, live in living color. I think there's a lot of brag. Well, I guess it's probably you can see me all right, right? You know what? I'm going to do something. I'm going to just close the blinds because I think that background light coming in is casting a shadow on my face, and it's maybe a little tough to see. That might be a good thing, actually. You might not want to see my beautiful face. All right, here's what we're going to do today, folks, to be discussed tonight. We're going to take a look at last week, review last week. We're going to take a little bit of a poll here tonight, and we're going to look at next week. And I got a 2-minute tutorial. I'm going to give you a little Q&A session here tonight, and also going to introduce to you a live training event that we are going to be holding, and that's actually coming up tomorrow. Okay, so you're going to want to stay focused in on that and stay right to the end, folks. You want to stay right to the end on that one. Okay. So let's move along here. That's what we're going to do here tonight. So I want to introduce myself to you. For those of you who don't know who I am, why listen to me? Who the heck is this Hugh guy anyway? Who does he think he is? Who does he think he is? Well, I'll tell you, I don't think anything. I don't think anymore. My thinking days are over. Okay. Folks, early years, deep in the trenches, that's where I learned this stuff because I had to. I had no choice. I had an account with a financial advisor who blew half of it up, and my including my kids' education fund. And I vowed that my kids are not going to go through life without an education, and I will do everything I humanly can possible to make sure they are well funded for their education. So I had to seize control of my account, learn how to do this myself, and that's what I did. So we actually started, well, I actually started trading a long, long time ago. Um, and I started with stocks, went through the whole route, oh, cheap stocks, penny stocks, let's go with penny stocks. Well, that was a mistake. I did all that stuff. I'm not going to bore you with all the details, but long story short, I found my way onto day trading options on SPY, the stock that follows the S&P 500. Okay. And I started making some pretty serious money on it. And I started bringing home the toys, new cars, new house, new airplane, things like that. And people started noticing and wondering, well, what are you doing? Can you show us what you're doing? Did you win a lottery? I said, no lottery, just trading SPY options. So they coerced me and forced me and twisted my arm to put it up on a website. And here we are, many years later, we're still doing it. All right, so cool strategies. And we've been training people internationally since 2010. That's a long time. Thousands of people have gone through our program here, and I'm sure many of them are doing very well. I mean, I know they are. I know they are. So I'm looking for short-term breakout trades. All right. Get in the trade, get in, get out. Options have huge leverage. You don't need much of a move on, not, you don't need much of a move on the underlying stock SPY to make a lot of money and rinse and repeat. Just keep doing that over and over again. All right. And you can do okay. So things went really well a couple of years ago, 2.5 years ago, as a matter of fact. It was we got the attention of Eagle Financial Publications, and they bought us out. Then they hired us back. Then they brought on John Johnson. He is an Eagle. Actually, he was retired from Eagle. He was one of their gurus, and he had his own service and whatnot. But he couldn't stay retired for very long, right? His background is actually in law. He's actually a lawyer, commercial litigation, um, specializing in oil and gas. Okay, great guy. He's got over 21 years of experience as well, trading and training. Very good. Highly acclaimed in many publications as well. Media, he's been quoted many, many times. All the big name media that they'd always call him for quotes and different things. And he too has helped thousands of people gain success in the markets. He's got a very simple philosophy. Hey, take what the market gives you. All right, take what the market gives you. Very similar. We have very similar goals, very similar experiences, similar aspirations. We're very, and it's great. It's actually very good. So we've combined our efforts and we are now working together. We run the trading room together every morning, 9:20 to 10:30 Eastern Time. Before I get too far, I want to remind you, Spy in the Market, this is our weekly newsletter that goes out every Thursday. It's a free newsletter, very light, easy read. 3 minutes is all it takes. Subscribe to it if you're not already subscribed, or daytradespy.com. Have this sent right into your inbox. And this week's topic is going to be the secret to successful options trading. The secret to successful options trading. I put it out right there, front and center for you. All right. There is no reason at all of you people, each and every one of you, I'm just going down the list here. My gosh, there's so many people online here. There's no reason every single one of you should not be a successful options trader on SPY. Let me just go through the names here. Well, there might be one. That's just kidding. Okay, my good friend Pat. All right, let's move on here. Folks, also don't forget if you are or you want to plan on coming down to California, we're going to be in Palm Springs. in about a month's time, June the 11th to the 14th, Freedom Fest. John and I are going to be hosting a paid live breakfast, live trading breakfast. All right. And contact customer service at daytradespy.com for details. But we are going to be down there. We're going to be doing several presentations at the Oasis of Liberty, Palm Springs, Freedom Fest 2025. Okay, going to be pretty exciting. So, again, June the 11th to the 14th. Write it down in your calendar. Maybe book a flight out there. I think it's going to be a good time. So, John and I are going to be out there just enjoying the sunshine and the the good company, and of course, all that Palm Springs has to offer. All right, moving along, moving along. Here's what happened this last week. Okay, very interesting week, folks. Probably the most interesting week we've had in a while. On Monday, and I've included Fridays in there. Okay, Fridays hanging around that 565 to 567 mark, somewhere in there. I just included that. But Monday, it was a very pivotal day. This followed the weekend when US and China sat down face to face, I think they were in Switzerland, and they met regarding tariffs. SPY immediately gapped up 17 points and pushed higher all week. That was on Monday. Okay. Now, for those of you who might remember, on Friday we discussed holding calls over the weekend because of this crucial, vital, all important event. And congrats to those who did. We're going to talk about that more in a little bit, okay? On Tuesday, a continuation of easing of China tariffs combined with lower CPI reports, that's inflation reports, advanced by another 7 points as the market continued to rise. Wednesday was a little quiet on Wednesday. SPY traded mostly in the range. Post-market profit taking brought it down slightly, but Thursday we had some more economic news, producer price index, PPI, retail sales, unemployment claims, Fed Chair Powell spoke, and other economic news. Overall, on balance of probability, the sentiment was anti-inflationary, and that continued with the bullish sentiment. We are officially out of that negative territory that we were in for so long here, for several weeks that we had before. So officially out of that. And that was a good thing. I know some people were sort of stranded in calls and wondering, oh my gosh, what's going to happen? What are we going to do? What are we going to do? But that was pretty good. The market came up. And now on Friday, the SPY rallied again to a level not seen since early March. And that was in part to Trump's comments that he could not meet with all 150 counterparties seeking deals. He said, oh, I'll get back to you in the next 2 or 3 weeks. Or was it 2 or 3 months? I can't remember. It doesn't matter. He's back there. He's back there and he's pushing the market up now. However, Moody's ratings downgraded the U.S. after hours from the government's AAA credit rating due to fiscal deficits and rising interest costs. That's why the stock dropped on Friday afternoon. All right. Not a big deal. Okay. All right. So from a seasonal standpoint, here's where we sit. That blue line there at the top is the current SPY price. The red line is where SPY is actually the average of the last 5 years daily closing price on SPY. So you can see we're quite a bit higher. Now here's a look at the seasonal charts from a focused point. Okay. Historically, if you look at this very closely, SPY remained about the same from last week. However, it rose about 4 points the following week. So not sure if we're going to follow along in the seasonal standard here, but things are different now than they were 5 years ago, 4 years ago, 3 years ago, even 1 year ago. But this is from a seasonal standpoint. There's, pressure to the upside from a seasonal standpoint. Okay. All right. So what happened last week? News on trade policies remained front and center as key market drivers. We also had some positive developments, of course, in the U.S.-China relationship. That boosted stocks back into positive territory. Hard economic news also confirmed inflation is contained, at least for now. Peak tariff uncertainty may have dropped into the rearview mirror. Base case scenario, 10 to 15%. We'll see what happens. Of course, this changes day to day when Trump says things and things change on the home front. Still might see a temporary bump in inflation and moderating economic growth, but a recession now is likely avoided. As trade negotiations will spread out over the next couple of months, we can still expect some periodic market volatility. All right. So here's U.S. trade by country. Sometimes people wonder, well, who's important here? Are we talking to a country that doesn't have much trade with us? What does it really matter? Well, Canada is our biggest exporter, imports, right? We export most of our goods to Canada, and they're right there with the imports, mostly energy, right? Europe is next, the whole European market. Very strong, both imports and exports. Mexico's close third. And then it drops down to China. We export relatively little, about half to China that we import, which is what that trade imbalance is all about. And then we fall off down to Japan, UK, South Korea, Brazil, India, Taiwan. Um, but you can see overall that there's a lot of imports that we have here, trying to keep things balanced. Want to keep things balanced a little bit here, right? So, but anyway, that's kind of what that is. So here's a look at inflation, where they expect inflation to be coming up. It's moderated now in 2025, but tariffs pose an upside risk in the coming months. They're kind of wondering, is it going to go up a little bit here? This chart shows the year-over-year change in the U.S. core consumer price index and the 3-month annualized change in the U.S. core consumer price index, core CPIs moderated in recent months. You can see how with the tariffs, this could push up because who's going to pay for the tariffs? It's going to be you and me, right? We are going to be paying for those tariffs. And that, of course, is inflationary, but we're going to see what happens here. Okay, so moving along. Here is volatility. Volatility going into this year here. We see S&P fell 19% from February the 19th. That was the all-time high, driven by aggressive U.S. trade policy. But the stocks rallied as trade tensions eased and economic data remains resilient. So looks like we are pushing back up here, right? Nice to see that on the chart. Here's what happened last week in the markets. S&P actually grew 5.3% last week. Year to date, we're up 1.3%. Same with the Dow. Nasdaq grew the most last week, 7.2, of course, being the tech stocks and heavy on the overvalued stocks. They grew the most last week, but they're still year to date underwater by about half a point. Not a big deal. Okay. So kind of interesting to see that. Nice to see the S&P is back into positive territory here. So, all right. So here is up another poll. I'm kind of taking up a poll here. Uh, Thank you for that, Ray. He doesn't care. He doesn't need the training. He says, all I know is that your alerts just work. Okay, cool. Folks, if we do offer a full-on training course, and this is the big F, we're not saying we're going to do this yet or not, but teaching you all our setups, strategies, everything, how much are you willing to pay for it? Up to $2,000, $2,000 to $4,000, 4 to 6, 2 to 8,000. That's not two. That's a typo. That should be 6,000. What am I doing here? 601, 401. There we go. More than $8,000? Let us know in the chat box. Curious to see. There's been a lot of talk about Hugh. Please, can you teach us? Can you do one-on-ones? Do you do one-on-ones at all? At all? I want to know what you guys are, even though I'm just looking to see what you'd be willing to pay. Okay, and if we should pursue such a project such as this. Okay. All right, we got a pretty good mix here. Okay. Well, if we can do the training in such a way that even if you work full time, here's a comment here, still working full time, might not be able to take advantage. But if we would make it such a way that you would be able to take advantage of it, what would you be willing to pay if that is the case here? Okay. All right. Larry M. Cool. Angie, nice to see that. Okay. I know it would be more than 8,000, but right now I can only afford 2K or less. Okay, we got a good mix here. Some don't knows. Okay. All right, just about the sweet. Okay. Okay, maybe there could be some payment plan. Okay, cool. All right. Thank you for that. Nice little survey. Here is the week ahead. Monday, low, no news day. Same with Tuesday and Wednesday. Thursday, the news board comes alive with unemployment claims. We're also going to have flash manufacturing index PMI report, flash services PMI report. That's the S&P Global, and existing home sales. And on Friday, new home sales. Okay, new home sales. So as far as volatility is concerned, we're probably looking at low volatility Monday, Tuesday, and Wednesday. Shoots right up there on Thursday with some high impact news and tapers down a little bit on Friday. Of course, right? I expect volatility to increase when President Trump decides to hold a press conference, okay? Because when he speaks, that is the overriding news, the high impact factor that is going to move markets. So as of right now, I have nothing on the board of him speaking, but of course, he tends to pull that up on short notice. So whatever news happens, he likes to announce it, and that news is going to have precedence over everything else. Okay. All right, moving along here. Might even finish in an hour. All right, that'd be nice, right? Get you guys out of here in an hour. Um, and and then moving on for the evening, right? So we've got a little 2 minute tutorial here. Probably take us more than 2 minutes. Guys, going to go over some of the stuff here. Going to talk about my real trades on Friday, and interestingly enough, um, my trades were Friday afternoon. I did not trade Friday morning. As a matter of fact, I couldn't even get online Friday morning because we had a bad storm come through Friday night early, or rather Thursday night, early Friday morning, and wiped out the internet here. The internet was down. See, I have everything covered, pretty much everything. I've got my power is covered with backup generator, UPS, uninterrupted power supply. Also have all that. And I thought I was able to get my hotspot going on my phone. Well, I kind of did, but it's about as slow as dial-up, so it was not going to work. But anyway, John led the trading room on his own on Friday, did a great job, and got the internet back on Friday afternoon. Now, interestingly enough, I was in meetings on Friday afternoon, but I had during the Zoom meetings I had my trading platform up on the screen next to me, and when I recognized a little opportunity to make some money, I just jumped in, made a few bucks, jumped in, jumped out, jumped in, jumped out, that kind of thing. So here's what I did Friday afternoon at 1:04 for what's this 12 minutes. I got into the 593 calls, and there's the move right there, and that was what, a 12-minute trade. Jump back in at 122 for a 2 minute trade on the 592 calls. There's right there. That's a short. These trades are short, folks. All right. They don't have to be long. We're not here for the long haul. We're not swing trading. I don't care where the market's going to be tomorrow or the next day or the day next week. Forget it. We're just not that smart to know where the market's going to be, a year from now or 6 months from now or, a week from now or anything. If we want to make money, we want to eat today. Well, we got to take advantage of these short-term trades. After I sold at 124, I saw what happened. The market came back in and started going back up again. Okay, fine. Jump back into the 592 calls again. Got a 125, another 5 minute trade. These were quick trades. There it is right there. Now, it doesn't mean necessarily that the market, market's going to go in my direction right away. Markets don't move in straight lines. They zigzag up and down. But I seem to have this sense that I've developed over the years, and you will too, that you take a broader macro view of the market. And that's okay if they pull back a little bit. I mean, ideally, you kind of want to wait, want to wait for that pullback and then jump in. But I was preoccupied with my Zoom meeting, but I still sense that, it's going to be okay. That's going to be okay. I have plenty of time, not a problem. And over here in this first trade, for example, it pulled back and then it went, shot up. Second trade, it already started making the move up. That's so I jumped in. Same with the third trade, pulled back a little bit, then it shot up. And I could have made a lot more money, but I was good with that. And here are my trades. I'm not going to tell you how much money I put into each of these trades, but in the first trade, I made 11 cents in 12 minutes. Second trade, I made 11 cents in 1.5 minutes. In the third trade, I made 7 cents in 5 minutes. Now, if each of these trades was only 10 contracts, my gain here would have been $280, less commission, of course, from 104 to 130, excuse me, in less than a half an hour. In less than a half an hour. If these trades were only 10 contracts each, they would have made $280 less commission. Okay. For an average investment of just over $5,000. That works out to about 5.6% for the day. 5.6% a day. A little less when you factor in commissions, okay? Is that so bad? I try not to think it's so bad. All right, let's move on here. Let's move on. Folks, can you find $5,000 seed money? If you can find just $5,000 seed money, I'm going to show you what you can do. Because if so, you should be able to earn $200 a day as a day trader. An easy $200 a day. Now, ideally, you should have $25,000 invested with the firm that you are in with. In other words, if you are with Schwab and you have Roth or, you know, any savings at all and anything, stick it in a Schwab because cumulatively, if you've got 25,000, you can day trade. You can go in and out as much as you want. You can do 3 round trip trades like I did on Friday. Okay. Um, so that's really a no-brainer. $200. How much is that? You're probably thinking that's not a lot of money. But $200 every day over a week, that's $1,000. Is that not $50,000 a year? Isn't that kind of what the average U.S. person is making these days, or maybe not even that? I don't know. That's not bad money for working, if you want to call it that, very, very little. What would you do with an extra $50,000 a year? By the way, that's without compounding. That's $50,000 a year without compounding. And in other words, $200 a day, every single day for a year. The reality is going to be a little bit different. Why? Because you're not going to compound entirely, but a hybrid of a compound. I'll tell you something. Compounding is where it's at. All right. You want to compound. You know how Trump says, oh, the most beautiful word in the dictionary is tariffs. Well, I kind of disagree with that. I think the most beautiful word in the dictionary is compounding. Compounding, okay? And I'm not the only one that thinks that. Warren Buffett, you all know who he is, he accumulated 99% of his wealth after turning 50 years of age. 97% of his net worth was accumulated after he turned 65. This is what he says. The biggest thing about making money is time. You don't even have to be particularly smart. You just have to be patient. You don't think he knows a thing or two? Today, Warren Buffett, according to Google, is worth $160.2 billion. billion dollars. B with a B. And he still eats breakfast at McDonald's every day. Okay. He still lives in the same house he had in 1962 or whatever. Um, amazing, amazing gentleman. Um, folks, compounding. That's where it's at. Now, there are two types of people out there. Those people who understand compound interest, all right, and what that means. And those people get rich. Those who don't understand compound interest, they're destined to pay it. I'm sure many of us, many of you, I have in the past, a long time ago, and I'm sure we all know people who don't pay off their credit cards, right? They make the minimum payment. I had this discussion early on with my kids. Always pay your credit card. Do not pay. Don't pay don't pay the minimum. Just because your credit card company gives you 5,000 or 10,000 or whatever they give you an allowance to in credit, that is not income. That's a very, very expensive loan. And if you only pay the bare minimum or even slightly more, you will never get ahead of yourself with this. In fact, you're going to fall further, further behind. And you know what they do? They're going to give you more credit. Oh, I'm sorry, sir. You're pushing your limit. Well, don't worry. We'll give you more credit. We'll give you more rope to hang yourself. Right? Very, very important. Right? And it's going to affect your credit rating and everything else. Right? I told my kids, two things you must absolutely, with your life, protect. Number one, your reputation, and number two, your credit rating. Anyway, and those people, and of course we all know people who've gone really bad with bad credit, right? Interestingly enough, I know somebody who recently lost his house because he overextended his credit. Couldn't get ahead of it. Couldn't get ahead of it. Interest rates went up. He got a margin call on his mortgage, and he was defeated. Basically handed in the keys. He's now renting his house. Gentleman is 72 years old. Still working, but probably heading to retirement from his company. You know what the irony is on that whole thing? You know what his job is? He's a cost accountant. Yep, you heard that right. It's very easy to fall behind on that, but compound interest is where it's at. Now, I'm going to give you an example here. I talk about this a lot. Last week I talked about it too. Starting with $200 a day. $200 a day using our system. It's not that hard. Now you're going to make $200 a day, every day. After 3 months, right? You will have made, what is that? So after 3 months, you've made what, $13,000? Well, I think you can expect to make $300 a day after that for the next 3 months. You're going to accumulate another $13,000 in the next 3 months. And after that, I think you can put a little more in the market and expect to make $400 a day. Do that another quarter, and now you're going to be making $500 a day. So how much does this work out to? In 1 year, you should have turned that $5,000 into $100,000. You don't believe me? Let's say you start June the 2nd. Going to give you a couple of weeks. Get into our trading room, learn our program, get into this and learn what we do, right? And it shouldn't take you long. Let's say, you start June the 2nd. By the end of the year, after 12 months, I should say, not the end of well, actually, no, wrong. By the end of this year, by the end of 2025, you should have $50,000 in your account. Put it up on a spreadsheet. Now, I'm not going to bring you the whole long spreadsheet, bore you with that, but here's the beginning. Here's the beginning, the plan to earn $50,000 a year. And I wonder if I still have that spreadsheet up. I wonder. No, I have already closed it down. I'm just showing you bits and pieces of the spreadsheet here. You start with $5,000, your target 5,200, 54, 56. You ease it up every day. Do a spreadsheet, folks. Plan your trade, trade your plan, plan your trading program. If you don't have a map of your financial future, how are you going to know when you got there? How are you going to get there? You're going to what? Just wing it and well, whatever happens, happens, right? I think you're going to drive to Florida. Well, I think here I'm in, Buffalo, New York. I think I'm going to start driving west. I'll keep driving west. I don't know. Maybe I'll turn. I don't know where I'm going to go. Maybe I'll turn south at some point. Maybe I'll go all the way out to, I don't know, North Dakota and turn south. Oh, gone too far. Man, I wish I had that map. Right? Map it out, folks. Map it. Look what happens here. I'm going to tell you. By the end of the year, this same spreadsheet, I took a little screenshot here. Again, I don't want to confuse you with all these numbers and throw all these numbers in there and right. Here you are at, December 31st. According to this model, you're going to have $50,500. This takes into account the weekends, by the way. You won't be trading on the weekends. I think this might be a little wrong here, actually. I think, okay, you know what? I see here it says June 2nd, then it goes to May. I might be off a little bit here, maybe a month on these dates, but not to worry. I'd have to go back and check the spreadsheet on this. I think I might have jumped the gun here. I might be a month off, but the reality is you're going to make more than $200 a day, okay? It's going to be actually a struggle for you to keep it down to $200 a day. Moving it on up here, June the 1st. So actually, according to this, the way I'm seeing it, it'll probably be maybe, in the middle of June or something. You're going to have $100,000 plus using this plan. Again, the reality is you are going to make more than 200, more than 300, more than $400 a day. What I'm saying is have that budget. Don't go too much further than that. 220, 240, maybe 250, something like that. Don't go too crazy. When you're done for the day, shut it down, come back tomorrow, right? Folks, again, by the middle of the next year, June the 1st, you should have over $100,000, okay? And again, I might be a month off because I just noticed here on my first spreadsheet here, it jumped from June the 1st back to May the 7th. All right, so there might be a month off in that, but the reality is you should have it because you are going to be making more than $200 each day on that one. So now imagine yourself in control of your own financial future, financial security. All right. It's not only possible, but it's very much doable. You do not need to rely on a financial advisor for your financial security. You don't have to put all your money in. Here's the thing. People think that, oh, that bullish market, that bull market, I missed it because I was in cash. Not a bad place to be. Not a bad place to be because those people sitting in cash, they missed that massive bear market we just went through several weeks ago here. Okay, they might have not have taken advantage of, but if you sit in a nice cash account that pays something 5, 6, 7% or whatever a year, but you're using some of that cash, $5,000 to start this program of taking $200 a day and ramping it up. It's feasible to make $100,000 a year just with that. Plus, you've protected your capital. And if there's a recession, because they keep bringing up this recession, I hear this every so often. Here comes the recession word again. Oh my gosh, who cares if there's a recession? If there's a recession, cash is where you want to be anyway, right? You don't want to be sitting and holding stock that just lost so much of its value. Several weeks ago, how much did we lose? I don't know, several trillion dollars or something. We're all back now, but did we know that was going to happen that way? That is just such a volatile. I don't like sleepless nights anymore. I think that there's something to be said for being, in relatively stress-free and being able to sleep at nights, not worried about your investments here. Imagine enjoying both making money in the morning and doing other things in the afternoon. You don't have to be tied to your computer all day long. You don't have to be beholden to a boss or anybody else. No customers, no clock to punch, no obligations, having all the material things that you want, being able to help other people. Imagine helping your kids get an education or whatever, philanthropy if that's what you want to do, helping your family or, this kind of stuff. Um, as a fellow Eagle guru, John Johnson, he's my partner in crime here in the trading room. He said, being able to do what you want when you want. To him, that is the definition of success. That's the definition of success. And it makes sense. It makes total sense. I'm all with him on that. I'm totally with him because I thoroughly enjoy trading and then being able to do other things. Go hang out with the grandkids if I want, hang out with my wife, go do something, go do anything, right? Go flying, go boating, just hang out in the park, go for lunch with the boys. Um, Taking the stress off is pretty important. Stress causes a lot of health issues too, right? You don't want the stress. Okay. Folks, I saw this somewhere and I thought it was so good, I stole it. If it's meant to be, it's up to me. Nobody's going to throw money at you, right? No, nobody's going to be that way, all right? You have to do this yourself. You have to take the initiative, all right? All right. Now, I'm very excited to tell you that the other day, May the 10th, last Saturday, a week ago Saturday, is when we celebrated our 15th anniversary. We are now in our 16th year. So wherever you see any marketing saying, "Oh, in 15 years," well, we're on our 16th year of doing this now. And we never thought we'd last this long. As a matter of fact, everybody told us, we told ourselves, "Oh, this will fizzle out in a month, couple weeks, month or two, maybe 2 months, stop, 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 stop." No, we're not going to be around. And well, it mushroomed and ballooned and it took off. And okay, wait a second here. Folks, in celebrating this the other day, all right, last Saturday was the big meeting between China and the U.S., the trade talks. We told you about that the Friday before. John and I talked about this, and we said, "Hey, okay, Chinese economy is not doing well because of tariffs. The U.S. economy is not doing well because of tariffs. We all want to reach some sort of agreement here regarding tariffs and trade. We all know what each other wants. We're all going to try and protect our own, but we're walking into this meeting with the goal of getting some sort of a resolution to this issue that's before us right now. The trade imbalance is absolutely huge between China and the U.S. We are importing twice as much from China as we're exporting to them. This is very bothersome. So we knew, or let's put it this way, we didn't know anything, but we felt very confident that something was going to happen here. And any good news was going to be good for the stock market. Something else that happened last weekend, and we reiterated what President Trump said. He has quoted this. He said, "You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up." Now, like him or hate him, what he says tends to happen, right? You know, if he's going to tell you, now I can't think of a better negotiator. I can't think of a better market manipulator. Okay, let's face it. I'm pretty confident he knew full well what he's talking about when he said this. If nothing else, you should have listened to this. We also told you to hold calls over the weekend. We don't give you the instructions, but I think we said it in such a way that we are very confident holding calls over the weekend. Okay. Well, you want to know what happened, folks? You guys want to know what happened? Okay. Wow. Okay, look at all these people that are online. Oh man, I'm gonna have to go through some of these questions like carefully. Oh man. Yes, Einstein considered compound interest the most powerful force in the universe. Well, I'll show you what happened. The trading room the next day, Monday. All right. Trading room the next day, Monday. Remember what I said earlier? SPY gapped up 17 points. Remember what I said even before that? With options, there's huge leverage. You don't need much of a move on SPY to make some pretty serious money. Take a look at Carolyn. She was in at 308, out at 1352. Is Carolyn online here? Oh my gosh. Carolyn, are you online? Let me just take a look here. Oh, Carol, I am but a fool. Okay, Carolyn, where is she? Maybe, maybe not. Okay, maybe not. Okay, can't tell. Okay, there's more. Ira, gentlemen, it's holiday time. Profit 33,560. I'm going to mark this up. I'm going to have fun with the highlighter. Okay, where's that highlighter? There we go. Look at that. 33,560. I don't believe these people put tens of thousands of dollars into these trades, folks. Okay, and I'll tell you why. And by the way, he says, thank you for your service. Douglas made 43 cents on today's pick, two and a half times on last Friday's pick. I'm way too giddy to trade now. John made $9.16 on the calls. Yes, 916. Daniel took this into a profit, $9,432 for a profit of 207%, right? Take a look. Rob exited, $11,805 gain. Michael held over those calls. Look at this. $57,976 gain. I don't know how heavy he went in again. Um, San Diego cashed in for a $15,000 profit. Ken, 6,051 on last Friday's calls. Ralph says, wow, nice, John. My biggest win ever, John S. I held Friday's pick over the weekend on the 567 calls, whopping 138% return in a 667 out of 1586. Rainy, Rainy. I think he pronounces it Rainy. 12,295, the best win ever. Troy, 40 contracts, profit $36,320. I'm not making this up, folks. I'm not making this up. Let's see, anybody else? Jim says, I feel like a pauper. Only 31,500. Okay. Excuse me. Michael made over 20K on 20 contracts in his Roth. And he says, you guys are the best. Troy says, you guys rock. Rob here, got to get back to earth now. Picked up another 68 cents on the pick for another $680. What is that? 10 contracts. Bruce picked up $500, but got something way more valuable. With your guidance, I'm gaining the confidence in how to simultaneously take quick profits while managing risks. Thank you, gents. Ralph says, you guys are smoking. John, the other John says, following your two guidances on tempering greed, right? Emotion and being patient. It's hard to draw lines on this thing here. He has 28 consecutive days of positive results. Is that not awesome? That's the word I use sparingly now. Awesome. Usually I say, when people say, oh, it's awesome, I find myself saying, oh, that's awesome. And they'll say, oh, it's not really awesome. It's just like really good. Monty, 200%. Danny made 292% on leftover calls. Is it being too greedy to wish I hadn't taken the safe route with the rest of them? Folks, any questions? I'm going to just remove this now. Okay. All right, let's look at the questions in the questions box. Because I'll tell you, when I saw that, the hair on my neck just stood up. I thought, whoa, okay, is this a one-off? And then they all started to stream in because what happened was on Monday morning, everybody started selling off their options. And they started making some very, very serious money here. Okay. Ray. Okay, even though I've been doing this very well with the pick of the day trades, I've only experienced one losing trade. Just amazing. Nevertheless, I don't think I'm doing it. I'm timing them right. Okay, I wonder if you can show examples when the bid-ask spread tighten up. Okay, so I think you're talking about the pick of the day here, Ray. Just things happen so fast in the first 1 or 2 minutes. Okay, so confidence, you know this. Okay, so you get the pick of the day. You get that at around 9 o'clock, and let's say it's a call option, right? You queue up your call option. Opening bell comes. Use a limit order. Use a limit order. Now follow along on this because I'm going to try and explain this to you. So use a limit order, and let's say the ask price is $5.05, and the bid price is $4.92. Wait a few seconds until that bid ask spread tighten up to within a few cents, maybe 2 or 3, 4 cents of each other. Now you got a more solid price. You don't want 505 and 492. You're talking about, 13 cents spread there. That's not what you want because the price is it's all over the place. We don't know if it's closer to the 492 or closer to the 505, right? Wait a few seconds, doesn't take long, and you'll get this mostly when there's a gap. You'll see that on a gap. If it's fairly tight from the day before, you'll still see a little bit, but it won't be. So just wait a few seconds, right? And then when it tightens up, okay, now we have a direction. So now look at your 1 minute chart. Okay. If it's pushing to the upside, it's pushing green and it's a call option, pushing green, then you want to buy it then. Okay. If it's pushing red to the downside, wait until that 1 minute candle turns back to the upside. It might be 1 or 2 minutes, 3 or 4, maybe even 5 minutes. Don't go, say, 10 minutes or something. If it doesn't happen in 4 or 5 minutes, that trade's off the books. It's just getting too risky. So you want to get in those first few minutes, first 2 minutes preferably. So when it's pushing up, you want to buy it. Now, here's what happens. If it's pushing up and it's going up, let's say the ask price is 505, the bid is 502, 503. You put your order in for 505. You didn't get it because now it's 507. So you come back, you revise your buy price to 507, you put it in. You still didn't get it because now it's 510. So what you want to do is you want to get ahead of the line. And here's a little trick. Works extremely well. And this is how people do well with this. If it's pushing up like that, and the bid is now 507, sorry, not the bid, the ask is 507, you want to buy it, put your price in at 508 or 509 or even 510. That puts you at the front of the line. And yes, you might end up paying 508 instead of 507, but you're going to get it, right? Because it's pushing up, you're going to get it. And yes, you will pay the 508. But as it's moving up, chances are it's going to blow through your 508 and 509, 510 very quickly. And before you know it, goes up to 520, 525. So as soon as it lands in your on your board here, on your platform that you bought it, immediately do the calculation. Let's say you bought it for 510. You're going to put it for sale for 6% profit, $5.41. Immediately put it up for sale, bang, 541. Is that right? 510 times 106, 541. Immediately put up for sale for profit, okay, for profit target, and let the market work its magic. Now, it might go up a little bit, might come back down, but just hold on. Chances are it's going to continue on, and it'll get you your profit. And I've been finding lately that this actually happens very quickly, oftentimes within just a few minutes. So go ahead and do that. So give that a shot. All right. Let me know. Let me know later, Ray, how it works out for you. All right. Some more questions because I got some really good stuff to tell you in a couple of minutes. So you're going to need to stick around for this. All right. Very serious stuff going on here. All right. What services do you publish those intraday trades? Okay. In our inner circle, all right, which is I think it's our least expensive program. I don't know what the cost is. If you want to know anything about the specials of the day, contact customer service at DayTradeSPY. As opposed to going to the website, you can buy all this stuff, all our programs on the website, daytradespy.com. But if you email customer service at DayTradeSpy and say, listen, I'm interested in this, this, and this. I'm interested in the inner circle. I'm interested in the DayTradeSpy signal. I'm interested in the pick of the day. I'm interested in the trading room. What are your best prices? They'll give you the best prices, okay? So, but in the inner circle every day in the afternoon or evening, we publish the results as to what we did that day, okay? All right. Why is this better than your morning trade targeting 6% gain? No watching the market all day. Okay, so what happened on Friday, Peter? I think you're talking about my Friday um, trades. Because I didn't trade, I still had the insatiable urge, appetite to make some money, right, in my trades on Friday. So I was doing this crazy meeting I had to do with the Eagle people, and I thought, well, I still have that other monitor on the other side. I think I'll just pull up my website, my not my what's my trading platform, and while they're chattering away, I'll just make some trades. So that's what that was all about. A couple nice easy trades. All right. What did he start with? $5,000. That start was $5,000. Okay, Thomas, what's your winning percentage year to date in the last 12 months? I think we're up around 90%, 85, 90%, something like that. Um, and we're doing extremely well. I think the pick of the day and the day trade spy signal, they're pushing 89, 90% each. We have another program I'm going to tell you about in a couple of minutes that's doing 85%. Very easy program, 85 plus percent. Um, and it's yeah, we're doing very well here, folks. We're doing actually quite well here. What stop loss do you use? I do not use stop losses per se. That's not to say I don't manage my positions very much. I do. Once in a while, if I'm in, if I okay, how should I say this? If I am in a position that is just not going to happen, right? And this happens mostly with puts for me. Puts and I don't get along very well. Love-hate relationship, especially in bullish markets. So I tend to look at the bullishness of markets. Markets now, the thing is, markets take the elevator down and the stairs up. All right. So, but I'm longer term. I always have this bullish tendency, and I like to make money to the upside because if you give it enough time, the markets go up. Okay. So you want to be in a nice bullish trend, and then you wait for that short-term retracement back to a support level, and then get in when it starts turning back in your direction. You get in, make your money, get in, get out, repeat that several times a day, and you're going to make your money very easily. You should make your money very easily. All right. And that's it. So, but every now and then, if I'm in a bad trade and I have to dump it, I will. I don't necessarily use a stop loss because if you have a like a hard stop loss, you'll find that it's going to hit it more often than not. Because let's face it, options have huge leverage and they bounce around a lot. They go up, they go down, and they go down and down and down, then they go back up. And how many times have you ever had a stop loss take you out and you keep watching it if it's still your trade? And then you say, oh my gosh, had I waited 10 minutes, I'd be in profit. 20 minutes, I'd be making 30%. What the heck, right? And that's what happens. And that's really not a good way of doing it, right? So stops in that fashion don't really work well. Okay. Um, the spreadsheet assumes no losses. Unfortunately, that's not been my experience. Okay, so using our system here, okay, and if you're very careful and you control your emotions, now, okay, let me explain something about that spreadsheet. Let me go back to that for a second. All right, I'm going to go back. Where is that spreadsheet? Where is it? This is actually really interesting. You're going to find this really interesting here. Let's look at this one here. All right, making $200 on $5,000 is not that difficult. Okay, now, if you want to do one trade, all right, and you're putting $5,000 in, that is a 4% return on investment. On the pick of the day, we use a 6%, and in the day trade spy signal, we use a 5% as a measure of success, and they have been extremely profitable. They're pushing 90%. Now, if you're only going for 4%, well, you're going to be virtually 100% successful. You should be when you get the trade set up. Now, if you are, as I mentioned earlier, you've got that ability to trade in and out several times a day. In other words, your fitting of the pattern day trade rule, you're okay that way. Then you can maybe just aim for $100 a trade, do that twice. And if you're not making that, then you got into the trade at the wrong time. I'll be honest with you. You shouldn't be in a trade if you can't make $100 on a $5,000 trade. Something has gone horribly wrong with you in that trade, okay? And that should not be the norm. Now, every now and then you get an outlier, something just happens at that split second or something. However, if you have enough time, you should be fine. In fact, that's one of our models. If you have time, you should be fine. So never buy same day options that expire because when that turns against you, good luck in getting it back, okay? So you always buy time. And this is what we teach you. Let me tell you. So we said that's 4%. Now look at this. When you're up to midstream here at the end of the day, at the end of the year, let's say you're doing $400. Well, you're looking for $400 a day, but you've got $50,000 to invest. $50,000 to invest, right? Um, like, hello, $50,000 to invest, $400. That means that you are now looking to make 0.8% on your money. If you were, now you're not going to invest the 50,000, all right? But if you did, you are, so this is what I'm saying is that the compounding. So let's say you're investing, $10,000 to make $200. Well, now you're only looking to make 2% a day. But if you put the whole 50,000, now you're only looking at 0.8%. And if you go with the full 99,000 to make $500, well, you're looking at around 0.5%. Actually, no, 0.4%, 0.4%. I mean, you get that instantly. That's a no-brainer. That's truly a no-brainer. Okay. So that should be really, really easy to make. Okay. So let's go back here. Some more questions here. Ray says, congrats, thanks. Wishing I found your service even a year ago, but glad to be a member now. It's never too late to join here, folks. Anybody who's new on, yes, of course. Oh my gosh, I still get the accolades coming in. Gene C, who's yeah, on those trades, he picked up $762. Congratulations. Michael R, yeah, 70 contracts. Okay, that's cool. Anyway, I'm going back through. See, you see it's 9:02 already. Oh my goodness, see so many questions here. I like to use limit orders. I don't use market orders. Market orders, you can get burned on a market order, although not likely, but it's possible. I'd rather be able to tell the market what I'm going to pay and what I'm going to get, rather than the market telling me. You could end up paying more for a trade than what it's worth, more for an option. So, all right. Now, yes, when I say starting with 5,000, that's what I would be putting in a trade, $5,000. So in other words, I'm buying some time, but don't worry about the money because you're going to get it back when you sell. If you spend $5,000 on a trade and you sell it, well, you're going to make $5,300, right? You get it back. So, all right, Larry, pretty new to trading. Okay. Navigate the TD trading platform until I understand. I need more if I can start trading. I've traded out. Okay, so Larry needs some training. I've traded options before, not the way you do it. Would you be able to advise me at this point as far as purchasing one? Okay, I'm glad you asked, Larry. We actually have exactly what you are looking for a product to get started. That leads me into my next PowerPoint, and I am so proud to show you this. Okay, Keith, I believe he's a doctor. Place my trade, then got to get to my clinic. Since I can't stay and watch, I have to place my trade, then buy and sell first off. Put my 6% gain and 15% loss. Yeah, that's a good idea. You're going to be fine. You'll get your 6%. Should get your 6%. Folks, I am proud to introduce to you right now a live training event. We are calling it our first hour formula. Pay very close attention to this. This is going to be a trading strategy that John and I are going to be presenting that has an 85+% win rate so far this year. We're going to be presenting this Monday, tomorrow, 2 p.m. Eastern Time. This session is free, absolutely no cost. What you're going to do is register. in the chat box. I am going to put that up right there. There is going to be a registration link in the chat box. Bear with me while I figure out how to use this chat box. This is not something we do all the time, but here it is. I am now sending this off to everybody. You should have a registration link to our free session that we are going to teach you what we call our first hour formula. This is developed by the marketing team here at Eagle, okay? But this strategy proves an 85+% win rate so far this year. And John and I are going to be doing this free tomorrow, 2 o'clock. Best to budget probably about an hour and a half for this session. It's going to be pretty fast moving. It's going to be pretty good. Again, click the link in the chat box. I'm going to leave that up there. And what you're going to want to do is join in, get there early. I don't know what the limited seating is going to be. This is actually going to be, believe it or not, on GoToWebinar. GoToWebinar, not Zoom, but GoToWebinar, okay? Click that link, register now, get your name on that, okay? And while we're doing that, I'm going to thank you now for joining us. Going to leave that in the chat box, and we will talk to you hopefully tomorrow morning. Thank you all for joining us. And it's really been a pleasure, folks. Good night, everybody.
Trust the process and keep your eyes on the prize. I can tell you what